We need to talk about another major insurer leaving the great state of California. We can talk about some earnings next week. We can look back at just how broken the housing market is. But let's get into this, folks. Let's talk about BlackRock actually filing papers for a spot Bitcoin ETF with Coinbase as the crypto custodian. Looks like BlackRock is stepping into the crypto space. It would be interesting to see, with all the regulation going on in the industry, if a spot Bitcoin ETF makes it to market. I would think, given BlackRock's size, that at least there will be some discussions around it. So again, for you folks in the crypto or Bitcoin world, I have to assume that that is net positive, not something I pretend to have any great depth on. But certainly, I would think encouraging news for I don't know what you would call it, the masses, the bigger money coming to this market. So that's what I saw from that. I did read a very interesting article about the fact that the Fed has destroyed more housing supply than demand. That was so well written, and I'm shocked that I haven't said something similar. I certainly have meant that. I've certainly tried to communicate that. So let's break that down. What does it mean that the Fed has destroyed more supply than demand? Well, I think it's very interesting. It really goes back to the interest rate lock-in that we've talked about a bunch, that was lucky enough to be in the Fortune magazine, which was a great honor to be in that magazine that I read as a teenager in my 20s. And it's exactly right. Right. When you think about the Fed destroying demand, you kind of get that, right? Higher rates, lower affordability kind of makes sense. It's obviously what the doomers are talking about in social media. But I just love the way that was written. They've actually destroyed more supply. Think about that. The move up buyer, they are a sell and a purchase. I think that's exactly right. With the Fed taking rates high in a extremely accelerated manner, right? Something like 11 months, you've really caused that lock-in. And you've caused more and more people to say, I will never sell. I'm not selling. I'll stay put, all these things. So I think it is absolutely true and mind bending to go, you know what? The Fed destroyed supply. And I would agree, they destroyed more supply than demand. It is just wild to see. And you can really look at that in existing home sales. Existing home sales are down 40%. Active inventory is, roughly speaking, 450,000, where it should be closer to 1.1, back to 2019, 2018. So again, yeah, I think they have destroyed supply. It was really, really well written and a thought provoking. Kava Group, I don't know if you've seen it. We haven't really had many IPOs to talk about in the last 6 to 9 months, but they popped big time on Thursday or Friday. I think it was Thursday. Kava Group IPO'd, went up 117% day one. If you don't know who Kava Group is, they are essentially a restaurant chain. Microsoft, out hyping AI. Yes, folks, AI stocks are going through the moon. Microsoft predicted $10 billion in artificial intelligence revenue. That's a way to goose your stock. Talk about 10 billion from a brand new product line. Morgan Stanley's out saying the Fed is done. The Fed is done. The Fed is done. I agree. It's all theater. It's all pomp and circumstance. It's all scare the market. But Morgan Stanley's out with a piece saying the Fed is done. Lennar talking about beat revenue, beat top line, beat bottom line, really highlighting that home buyers have accepted the new normal interest rates. Can you believe that I think it's about 8 weeks, we will actually be lapping last year's peak and could very likely have negative year-on-year interest rates. I think last year, sometime coming up, we were at about 7.37. I think as we sit today, we're below 7. So in very short order, we won't be saying, hey, rates are up. We'll actually be saying rates are down year on year. Yep. Home buyers are accepting that. Maybe they're getting mortgage rate buy downs, things of that nature. Looks like Lennar delivered 1,000 more homes than expected. Obviously, we've been talking about new home construction just crushing it this year. It'll be very interesting to watch existing home sales next week. Comes out on Thursday. I think expectations are for 4.24 million. Last month was 4.28 million. I'm actually calling 4.33 million. So a slight beat and a overlap the month before. So it'll be interesting to watch that. Um, so let's talk about just how broken the housing market is. Read another interesting article again that Fed has destroyed more supply than demand. So first and foremost, 40% of homeowners own their homes free and clear. Pretty wild, right? Pretty wild. So let's just do some math together. I was not prepared to do this, so let's see if I can do this off the top of my head. Let's assume there are 1,000 homeowners. If there's 1,000 homeowners in the country, 400 of them will own their properties free and clear. Said another way, 600 of them will have mortgages. Okay. Now, 82% have mortgages below 5%. So again, we're going to do very quick math. 80% of 600. So would that be 480 homes? 480 homes. So we have 120 homes above 5%. 62% of homes are below 4%. So if we go back to the number of 600 and we take 60% of that, so that would be 240 to 600, so 360 homes roughly are below 4%. If we say how many homes are 3% or below, that's 23.5%. So again, roughly speaking, 120 homes would be below 3%. So again, folks, the Fed has destroyed more supply than demand. And again, I think they broke housing when they kept rates too low for too long. That second year of exceeding low rates was a mistake. Back to the insurance company leaving California. Looks like State Farm was first, followed by Allstate. Yes, folks, if you are in the great state of California and you have your policy canceled or can't get a quote from Allstate, you can go to a playlist on my channel called The Hub. We have actually added an insurance broker. Just perfect timing. I couldn't imagine better timing. We will be talking to them again on Monday about this. But yes, looks like another insurance company has decided not to insure real estate in California. This is a growing problem, and I have had a policy canceled myself, and we are getting that requoted. And then lastly, let's talk about earnings next week. Things to watch. We got Tuesday, FedEx and Lazy Boy. It'll be interesting to see what's going on with shipping. Lazy Boy, we'll see what's going on. We got KB Homes on Wednesday, Winnebago, Garden Restaurants, Accenture on Thursday, and CarMax. All right, folks, take care of yourself. Have a wonderful day. Like, subscribe, comment, be part of one rental at a time. Thank you.